point of view tonight is not just discussing the geopolitics of the Israel-US-Iran conflict. It's also looking at the economic implications. When we talk Middle East, we talk oil, we talk crude, we talk natural gas, we talk logistics and transportation. We're speaking to Abass Tasunti of the NPA very shortly. I'd like to show you a video which has made the rounds, essentially explaining the critical nature of the Gulf. Now, the Strait of Hormuz is part of the Persian Gulf. The reason this is called the Gulf War, or the Gulf region, is that the Persian Gulf is a place that connects Asia to Europe. And this Strait of Hormuz is a very critical artery for global logistics, transporting oil from two parts of the world. Let's hear this quick analysis, and then I'll show you a few more things.
Kilometers wide, lies between Iran and Oman. Around 20% of the world's oil and nearly 30% of global LNG flow through it every single day. Iran's ready, with submarines, missiles, and fast boats stationed nearby. One missile strike, oil tankers stop, prices could spike up to $200 a barrel. Global markets crash, recession begins. That's why the U.S. Navy is always here, to keep the energy flowing. Because this isn't just Iran's choke point, it's the world's lifeline.
So that's the Strait of Hormuz. As we've been told, 20% of the world's crude or oil passes through there. Some people believe even more. 30% of the world's natural LNG, liquid natural gas, passes through the strait. Already, 3 vessels have been hit as a result of this conflict, and there have been announcements that vessels should not try to cross at any time. So already we're seeing that that strait has been blocked. Let's show you the behavior of oil prices, all right? Now, this is Bloomberg earlier today. Oil jumps to its highest in 4 years. And you note that we are in early March. So as of January, oil was teetering around the mid-50s to $60 per barrel. This is crude oil. Now, we're told it's getting closer to $73 or $72 per barrel. Abass will give us the exact figures. Why are crude prices important? How crude behaves affects everything. Don't forget, even though Ghana produces crude oil in our petroleum fields, we are a net importer of finished products. We don't own all the crude we produce in Ghana, and because we depend so much on imported finished products, once the base price, crude, goes up, it affects the price of finished products. So that's another important thing to look out for. Abass will discuss that with us. The other chart I want to show you, and by the way, this is the highest in 4 years, and the conflict is only 3 days old. So imagine if this conflict goes on for 4 weeks. Imagine if it gets into a full-blown war. In the except I play, some people think it will go beyond 100. Once oil hits $100 a barrel, everything is thrown out of gear. But that's not the only factor here. Liquefied natural gas, or gas, which is usually what the Europeans depend on, because don't forget, because of the Russia-Ukraine war, a lot of European countries no longer source their gas from Russia because of the sanctions. So they depend on places like Qatar, Oman, particularly as a major facility in Qatar that does gas. Because of the bombings that Iran is retaliating, a lot of the energy installations, Aramco's, one of their main oil installations, and some other installations in Iran have been closed down from precautionary level. Now, once you have that type of situation, gas prices will go up. So look at the gas chart. You have gas prices jumping pretty steeply. So you have gas prices in Europe going up pretty steeply. It's probably one of the highest we've seen in a long time. Oil jumping for the highest in 4 years, and then European gas surges to highest in a year. Started out this 2026 around 40. It's gone now above 45, and it's going up. Look at the green part of the chart. Very, very high indeed. This is, again, a Bloomberg chart. And this is Dutch front month futures. This Europe's gas benchmark. So European gas prices have almost doubled in the past 3 days. And then, of course, there's a cloud at the end of this, the silver line at the end of the cloud. Gold prices have also gone up because people are moving to gold with all the uncertainty. Ghana is Africa's largest producer of gold. So whilst oil prices could hurt us, some people think the gold price surge could benefit us. And therefore, you look at gold going above $5,000 an ounce. Pretty good news for Ghana. Of course, if you export your gold to the Middle East and the Middle East is having crisis, it could affect even the ability of people to buy your gold. Let's talk to Abass. Thanks for joining us the head of economics at the NPA. Abass, is that the right title?
Economic Regulation and Planning.
Wonderful, economic regulation and planning. In your scenario planning, is war one of your factors when you do your analysis every morning before you present to either your boss or the president? Is war a factor in any of the things any of the scenarios you model?
Yes, so geopolitics is always one of the things we look at when we are monitoring prices because it's one of the factors that always drives prices up sharply. So every day as we monitor the world market, we always look at geopolitical issues. And in fact, we've been monitoring this issue for some time now. If you remember somewhere in December when President Trump told the Iranians that help is coming soon, the markets have been anticipating that something like this will happen. And so every time we monitor the world market, geopolitics is one of the things that we always look out for.
How do you interpret the current prices of crude? The Bloomberg chart shows us close to $72 a barrel, moving quite steeply higher than the 55 or 56, 60 that it was a few weeks back. How steep is the rise and how concerning is that from an energy analysis perspective?
So it is concerning because for some time now we've seen prices in Ghana fall at the pumps. And this was mainly because we saw the world market prices come down. And also our exchange rate, as we know, has been doing well. So that has led price at the pump fall. But if you've observed, we've seen prices rise for the past 2 windows. In fact, the last window of February and the current window we are in, prices are expected to rise. And this has been because of, again, this war that the market has been anticipating. Then the checks that we've done, or the numbers show that between January and February, the price of crude oil, for example, rose by $10 per barrel because of this risk that the market was pricing in. And so that has led to our price go up here in Ghana as well. So prices going up is always something that we are concerned about because we prefer stability in prices, and any issues that affect supply in geopolitics is always one of them. It leaves prices up, and consumers will always complain about this.
The analysis suggests this is the highest in 4 years. So according to Bloomberg, oil jumps the most in 4 years. And this is just day 3 of the conflict. So if this continues for another month, how do you see the situation? What are the scenarios you're looking at? Of course, it's just a 3-day war, and already this is the highest in 4 years. So imagine if it goes on for a month, what are we going to be seeing?
We are hoping it doesn't get there. But the issue again is that if you remember, exactly 4 years ago, Russia attacked Ukraine and prices shot up sharply. And that is why the news is that this is the highest in 4 years. After they rose to their peaks sharply in 2022, they came down, they started coming down. The thing is that one thing about war is after a while, the risk gets priced into the price. It gets priced into the product price, and therefore the price didn't come down at some point. So the Russia-Ukraine war, we all know, has still been ongoing. Prices went up sharply when it started. After a while, it started dropping again because the market will always find a way to survive. And so we pray that this particular war does not extend beyond the month, like you are saying. But if it does, the thing about the market, like I've said, is that the market will always price it in. It will not continue rising. It will peak at some point and then start falling because there are measures in place that the world will always find and will bring in to bring stability to the market. You know, for example, the strategic petroleum reserves that the US and the IEA member countries keep. Whenever supply on the market, the global market starts dropping, they will release them. Another thing that will happen is that OPEC members will begin to produce more to make up for the shortfall that we have. You know, they have their quotas for production, and they do this because they want to keep price at certain levels. But where there's a shortfall on the market because one of their members is not producing, and in this case, if Iran's products are not coming to the market, then the OPEC countries will definitely have a meeting and then look at producing more. Saudi Arabia is always in a position to produce more than they are doing now. So the markets will always adjust after some point. We will not see price continue to rise forever.
Ghana has oil, and therefore, when prices go up, some people believe it shouldn't be a bad thing because we will benefit from high prices. How come inevitably consumers suffer when world prices get elevated over a long period? Explain that to us.
So First of all, Ghana has oil, but our oil is also priced based on international price assessment. So our oil is not isolated from what the price on the world markets are. So the Jubilee oil that is priced here in Ghana, it has a very direct relationship with the Brent oil that is used globally. And so as Brent goes up, Ghana's oil will also go up. And as Brent comes down, Ghana's price will also come down. But we also have to look at the fact that Ghana, like you mentioned, is a net importer of petroleum products. Yes, we produce crude oil. The crude oil that we produce in Ghana, if we were to compare it to our consumption, assuming Ghana owns all of that crude oil that is produced domestically, it would have been able to meet our demand if we process everything domestically. First of all, we don't have the domestic refinery capacity to produce everything that we need. But the most important thing is that not everything that's produced in Ghana belongs to the country Ghana. We know we get some part of it. And so the portion we get, if it was really to stay in Ghana, it will meet our demand. So that's something that we must take note of. And so we will continue to be exposed to the global market because of some of these dynamics.
In the price that people pay at the pump, is it just the world price of crude that determines that? What other factors determine how affordable petroleum products are at the pump?
So one, the price is number one. The cost of the product from the source is always number one. But another thing that this particular war, for example, is causing is also the other costs like freight. As we know, you showed a video that showed that the Strait of Hormuz has been closed because of the attacks there. Now, what this means is that the vessels have to travel longer routes. And so their cost of shipping will go up. The freight cost will go up. Insurance will also go up because of the threat that is on the market, on the threats on the seas. And so all of these combined will definitely lead to price go up. Now, remember that in economics, demand and supply always play a role. As supply from Iran is going down, China, which has been taking a lot of this oil, will now look to other places to take part of the oil. And so it means that the European world, the other parts of the world are now going to crumble with China for what is left. And this is definitely going to let demand go up. And so as demand goes up, it is also going to lead to price go up. And so the price of crude oil alone is not what we look at. The other factors, like I mentioned, freight, the insurance, and also the demand, which may be rising more than supply, always play a role.
We'll take a break. When I come back, I have two more questions for you because the dollar has begun strengthening again in the wake of what has happened since the war began. And then, of course, the big question, do we have enough finished products so that if there was a global supply shortage, Ghana could survive? We're still on the point of view, looking at the geopolitical issues within the Gulf region. Stay with us. Welcome back. We're still on the point of view. We started off with Professor Vladimir Nchudanso, who discussed the geopolitics of the Middle East and U.S. unilateralism, the Israeli effect, and the Iranian response. Now we're looking at the economics of war, the Strait of Hormuz, which is a major artery for the supply of oil products, and of course, whether Ghana has enough stocks. Now, Abass, thanks for staying with us. Where do we get our finished products from? Is the Middle East as critical to us? And is that strait part of the routes that the oil that comes to Ghana uses?
Yes, so a very good portion of what comes to Ghana goes through the strait, but it doesn't go through the strait directly to Ghana. We benchmark our products mostly to the Northwest Europe markets because it's the closest trading hub to Ghana. So products, typically crude oil that will leave the Middle East to refineries in Europe will pass through the strait. And India also has products passing through the strait. Recently, we've been having some of our products coming from India. The major refinery called Reliance. Most of its products will come from, most of our products will come from Reliance to West Africa, offshore Lumi. And so as long as crude oil transport through the Strait of Hormuz is affected to both Europe and India, we are directly going to be affected.
So the question is, do we have enough stocks of finished products in the event that this drags on and the closure of the strait continues? They've already closed it, right? 20% of the world's oil comes from there. If it continues for, say, a month or half a year, what's going to happen?
So available stocks, yes, we have enough to meet our demand as a country. availability of petroleum products and ensuring energy security is one of our topmost priorities here at the NPA. Because without the products being available, we will not even be able to discuss pricing. And so product availability is something that we always do. And so what we do is we have a plan to ensure supply, both for imports and for domestic supply. Let me start with the domestic supply. We have our refineries producing. Central Oil Refinery is producing every day for the past since June last year. They've been producing consistently, and they meet about 30% of our demand. The Atuabo gas processing plant, for example, has also been producing LPG and putting on the market. We've seen our domestic refinery Tor also undertaking something around maintenance, and they are almost done with that. They'll be joining and also producing. So the two major refineries, Tor and Central, together can meet about 50% of our demand. And in addition to that, we are based on an import plan. We have cargoes that are supposed to also continue to be started at the end of May. We always plan our imports on a quarterly basis. I mean, to the end of April, we have our imports plan on a quarterly basis. The good thing for us here is that, because Dangote started producing imports into West Africa, majority used to go to Nigeria and then some come to Ghana. So both Ghana and Nigeria used to be the biggest off-takers of products from Northwest Europe. Now, because of Dangote, diesel, for example, is in abundance. And today I was just reading a story from S&P, a news from S&P Global Platts, that indicates that there's abundance of diesel in offshore Lumi markets. And so in terms of supply, and then mostly these products come from Lumi to Ghana after they have come from the Northwest Europe. So we have abundance of cargoes scheduled to discharge into Ghana. None of the cargoes that have confirmed delivery based on our imports plan have said that this war is affecting their ability to deliver based on schedule. So we shouldn't be scared about shortage at all. We've always kept this import plan balanced with domestic supply, and we've always had products available for consumers. When I remember that in 2022, when Russia attacked Ukraine, we faced the same challenge, but we didn't face shortages on our markets. And so our import plan has been robust, has been very reliable, and we never had shortages in Ghana.
What about price adjustments? The US dollar has begun to strengthen slightly. Some people predict that the dollar will gain against the cedi this year. I think I read Data Bank published this. I know the FX exchange rate is also critical. Should we be concerned? Because in the past few months, we've had relatively low petrol prices. The whole price floor discussion even came up with Star and Goil. But somehow, when global prices start rising, people find a way of raising the ex-pump price. So what is your price expectation, all things considered?
So it's unfortunate this is happening because it's definitely going to lead to increases in prices. Before even the war began on Friday, the new window started yesterday, and the prices that were going to go into this window, which started yesterday, 1st to 15th of March, indicated that prices were going to go up at the pumps. And this do not even take into consideration the effects of the war. And that, like I said earlier, the past two windows, we've seen prices go up because of rises on the world market. The exchange rate also has not been as strong as it used to be. It's depreciated marginally. So if, like you said, the US dollar strengthens further against the cedi, then the combination of the US dollar strengthening and the Ghana cedi, and the oil prices going up on the world market means that we are going to see our prices go up further at the pumps, and that's something we are not happy about. But let me say that the direct effect of the war as it's happening has shown that prices are going up. This morning, for example, when the markets opened, the price of diesel, for example, rose by about 17%, which is very significant. Crude oil closed the market on Friday around $70 per barrel. This morning, it opened immediately by about $5 higher, and it's expected to continue going up. By close of today, you will know how far it's gone, but definitely it's going to go up significantly because the war has started. And so we are not happy about the combination of the US dollar strengthening and world market prices rising. That's definitely going to affect price at the pump. But we will realize it more in the second window of March, because that's when these numbers that we are seeing will reflect.
But your big headline for today is that Ghana has at least a month and a half of both diesel and petroleum, super premium motor spirit. So there should be no immediate jolt in supply. And there's also a number of vessels ready to discharge. So in terms of availability, you are not concerned yet?
Not at all. Not at all. In fact, when some saw our announcement that we have about 5 weeks and about 7 weeks of petrol and diesel, some are saying it is too small. Yes, if you compare it to what the likes of the US and China do, that is very small. But I think we have to put this into a certain context. if you look at the oil we can store as a country, the maximum we can go right now based on our available storage depots is 8 weeks. In fact, we got to know this because a few months back when Central started producing actively, most of our tank imports were not being sold onto the market. Central was going to the market. And our tanks got full. When the tanks got full, the stock levels could last us for only 8 weeks. So the reality is that we can't even store up to 9 weeks. But the most important thing is whether we have a plan to ensure that we always augment what we are consuming. And so the domestic production, the import plan we have always ensures that as we deplete or as we consume from the tanks, we are replacing it immediately. And so discharge is happening on a daily basis. We hardly have a day when the discharge facility is free. It's only free when we are doing maintenance. And for example, as we speak, maintenance is completing today at the facility. It started on Saturday. And immediately tomorrow, another vessel is going in to start discharge. So we should rather be looking at whether our supply sources are being blocked or not. Once that is not happening, then we are okay.
Thank you very much, Abass Tasunti, who's the head of economics and policy regulation at the NPA. Earlier on, we spoke to Professor Vladimir Ntwedanso, who's a professor of international relations on the point of view. We've been looking at the geopolitics of the Middle East and the Gulf region and also the effects on our economy. Thanks for watching. We'll see you next time. Bye-bye.